Vying against the dollar for FX dominance. Matt?
All right, let's take a look at futures here, up across the board, whether you look in Europe or the U.S. We've got FTSE futures up 0.5%. We'll be watching, of course, those big, heavy miners on the FTSE this morning. DAX futures up 0.75%, and CAC 40 futures up a little bit more than 0.5%. This after yesterday, European markets kind of searched for direction, and U.S. futures didn't do much of anything, but now they're up big with NASDAQ futures gaining more than 1%. Here's the global macro movers screen, the far left-hand column being the equity indexes. It populates as they open up, and you can see the IBEX and the FTSE both gaining at the open, with the Madrid index up 0.7%. The FTSE in London gaining about, now 0.5% and climbing. So we do see markets, European markets, opening higher and continuing to increase. The DAX up 0.6% now out of the gate. The CAC 40 up more than 0.5% as well. Investors are still awaiting comments from the Treasury Secretary nominee Janet Yellen on stimulus and the dollar. She speaks in front of the U.S. Senate. Important to acknowledge on a day like today that there are many Senates. Joining us now is Henrietta Pacmont. She is Wells Fargo Asset Management Head of Investment Grade Credit here in Europe, Henrietta. But of course, it's so important to watch the stimulus. It's what drives markets, U.S. stimulus situation, I should say. It's what drives markets around the world. And the dollar. What do you expect to hear from incoming Treasury Secretary Yellen?
I think we're expecting another big stimulus package. The numbers that we've seen so far are maybe 1.9 trillion again, and that's on top of the 900 billion that we had towards the end of last year. So that is meaningful at this juncture. And also the focus seems to be really money in the pocket of the Americans going forwards. And we're seeing also the Biden administration wanting to hit the ground fast in the first few days of office. So those are the kind of expectations that we're, in terms of numbers. We'll have to see what actually gets through because the margins, be it in Congress or the Senate, are quite short on the U.S. side. So there will be some haggling in the weeks to come.
Yeah, it's going to be a difficult ride in the US Senate, isn't it, for that 1.9 trillion. Henrietta, good morning. What inflationary impact would you expect this package to have? I suppose it depends if 1.9 stays 1.9 or becomes something considerably less. But what kind of inflation forces are you watching for in 21?
I think it is one of the hot topics for this year. My sense, though, is that it's going to be a feature of the second half of the year rather than what we're seeing now. And we're also going to have to see how persistent that inflation is, because we may get a boost in terms of growth as the population gets let out following the vaccination programs, and that may push on the inflation front. We need to see how long that lasts. And I think, from the central banks as well, there will be a willingness to look through that. Certainly on the European side, they'd be happy to see a bit of inflation, but also on the Federal Reserve.
Morning, everybody. I'm going to place an order to sell my two positions at 121.24. I'm going to sell positions at 121.5 and 121.14 at the price 121.24. Okay, so this position I'm going to sell, and the other will be at 5. This. And I'm looking to sell it at 24. 24. Okay. Let me calculate, and all of you guys, if you following my trades, need to calculate basically what kind of profit you're going to have from selling these two positions, and then you will see basically what profit you're going to be in. Later on, we will get again into short position, but at the different level. See you later, guys.
On the Japanese side as well.
That degree of rates normalization that you referenced there, Henrietta, that's already caused many to question that short dollar or weak dollar consensus we saw at the end of last year. Do you question it as well?
We've seen a pause in that weak dollar front, and yes, there are factors that are impacting that, be it the noises from the ECB that aren't particularly keen to see the euro appreciate too much. We're also the rates differential has come back to an extent as well, which would be supportive of the dollar. But you have got a situation where you have the deficits on the US side. So longer term, a weaker dollar is still a possibility from our perspective.
All right, Henrietta, we're going to keep you with us. Henrietta Packmal, Wells Fargo Asset Management, Head of Investment Credit Europe, stays with us. We're going to focus in on the continent, maybe a little bit of the island nation as well when we come back. The ECB and the European Commission warn about corporate vulnerabilities. Industry groups call on politicians to help viable firms clean up their balance sheets. We'll discuss the capital gap facing Europe's companies. This is Bloomberg.
Also, I'm going to place a stop on profit for Japanese yen. I'm going to place stop on profit 103.8. So let's go and here. And as you can see, I purchased the at 103.70. Okay. So as you remember, yesterday purchased the price. Overnight, it went quite substantially up. I place right now stop on profit at 103.88, and we will see if it will go higher. I will move further stop on profit, but at this stage, at this point, I'm going to right here. Okay. That's it, guys.
Markets in Europe. It says that the EU needs to find new ways to recapitalize businesses so that the hole on corporate balance sheets doesn't derail the recovery. Henrietta Pacmont, Wells Fargo Asset Management Head of Investment Grade Credit in Europe, is still with us. And I wonder if you see this equity funding gap for European businesses. This is according to the Association of Markets in Europe, and they're suggesting that the businesses that find themselves with so much debt might want to consider hybrid products. Do you see that as one of the ways out of a stretched corporate balance sheet environment?
We've already seen some of that actually over the course of last year. So if you look at 2020, we had record issuance on the debt side, and we saw corporate hybrid issuance in some of the harder hit sectors, particularly on the oil and gas side, for instance. So that is a way of plugging the gap in that regard. So I think we will be moving, depending on how things evolve over the first half of this year, towards more of a repairing of the balance sheets, particularly for the sectors that have been harder hit by the pandemic. So I do think there is still bifurcation between sectors that have been relative winners in this situation and those that have had that are struggling.
I don't expect it to hit IG credit, but if you look at smaller firms that aren't that don't have access to those markets, but maybe owe money to the firms that do you see any possibility of debt forgiveness? This is something we talked about a lot at the beginning of the crisis, but people seem to have stopped mentioning it now. And this is about $1 trillion worth of debt that I'm referring to, these small and small medium-sized enterprises.
Yeah, and I think what's masking it at the moment are the tremendous support packages that the governments have come to pass over the last year or so, and of course the support from the central banks as well. This is not a permanent state of affairs. Governments are going to have to start moving and going to start to address the support packages, the furloughs and so on. And that is going to have an impact, as you say, maybe not on the investment grade markets, but on the smaller companies. That is going to be an exercise that's going to have to be done with care and also in collaboration with the banks. Hence we've seen provisions on the banking side to start addressing and preparing for that transition later on in this year.
We've been talking, Henrietta, we've been talking a little bit about Italy today and the political turmoil there. Clearly, that's a narrative we return to with fairly regular frequency. But the ECB is backstopping the market, as we know, and so many investors tell us not to think too much about that. What's your view on Italian assets at this point?
I think you've hit the nail on the head. You've got a very active ECB at the moment, and they don't want to undo the good work that they've done over the last few months. And I think we've had a taste of that over the course of 2020, where there was an unfortunate comment about spreads, and we saw the market reaction. I think there's been a learning curve in that regard, and that's not something that they're going to want to reiterate going forwards. In terms of what to expect today, I do think that we'll have to see what happens in the Senate, because it's less clear cut than the vote that happened yesterday. However, the willingness of having snap elections at this point, and the benefit for the main parties as well, looking at the polls, it doesn't suggest that it's necessarily the path that they will go down. And I don't think that Mattarella in particular is very keen at this juncture, given the challenges that are facing the country, to organise a snap election at this juncture. So that
we were talking with Mark.
We'll get another Italian solution.
We were talking with Mark Cudmore, Henrietta, at the top of the hour about investors across all assets are still, I guess, slightly bullish, still need to be long, but they're kind of holding their noses because they have to put their money there, but they're not really expecting decent returns. Is that the same with IG credit? I mean, are we nearing a point where it just kind of hurts to pay, but you have to?
I think we're in a very unusual situation where the activity that's happened, particularly on the central bank side, has meant that financial assets have front-run fundamentals, and we need to see that fundamental catch-up occur in months to come. And to be fair, there's still a fair amount of uncertainty around that in terms of rollout of vaccine, in terms of what decisions are going to be made in terms of travel permissions going forwards. So yes, assets are already pricing in this recovery, be it on the investment grade side or on the equity side. So I think it's fair at this juncture to have a bit of a pause for thought. We've got results coming out that's going to give indications as to some of the damage that has occurred, and potentially we'll have to see how willing companies are to give guidance as well going forwards. But that can be an information point that will help markets make their minds up. We're still looking forward to the stimulus on the US side. From an ECB perspective, on Thursday this week, we're not expecting much. They already came out at the back end of last year.
Henrietta, thanks so much for your time. Good to speak to you this morning. Henrietta Bachmann, Wells Fargo Asset Management Head of Investment Grade Credit for Europe. And Henrietta will be continuing her conversation with Matt Nye on Bloomberg Radio at 9 a.m. UK time. Coming up on the programme, transatlantic repair work. After a tumultuous ride with the Trump administration, European leaders are eyeing renewed cooperation with the US under Joe Biden. So what does the future hold? We discuss next. This is Bloomberg.
Welcome back to Bloomberg Markets. This is the European Open right now, 20 minutes into the session. We're looking at green arrows across European equity indexes. Watch the DAX. You might see it climb a little bit higher right now as the Bild Zeitung, the most widely read newspaper, or at least widely circulated newspaper in Germany, is reporting that Merkel, the Chancellor Angela Merkel, is looking to extend the lockdown that we're in to February 15th. Now, that sounds like a long way away, especially considering what we've been through, but it's really not as long as we had been expecting. This current lockdown goes, Anna, until January 30th, I believe, or January 31st. And Bild had been reporting, as well as other newspapers in Germany, that Merkel may extend that lockdown 8 to 10 weeks. So another 2 to 2.5 months. This being a lockdown of an extension of just over 2 weeks, even though it destroys my Valentine's Day plans, is not nearly as bad as it could have been. So
that's actually the first thing I thought was Happy Valentine's Day when I saw that particular date. Here in the UK, we've been talking about the second week of March, so steering nicely clear of Valentine's Day, that's for sure. And let's put that to one side for just a moment and think about some global politics, Matt, because it is the last full day of the Trump administration. Across the Atlantic, the EU and the UK are hoping for renewed cooperation with America under Joe Biden after a rocky 4 years. Joining us now with some context are reporters Maria Tadeo and Kathleen Hunter. Maria, let's come to you first then. So from the European perspective, from the EU perspective, will the Biden administration lead to smoother relations with Europe?
Well, Anna, that's for sure what they're hoping. I mean, it's not a secret. Anyone that you speak to in Brussels, but also pretty much in every major European capital, will tell you they are relieved that Trump is now back in the White House. This relationship had become completely dysfunctional on pretty much every front. When you looked at the digital tax, when you look at trade, when you look at climate. So to answer your question, I mean, when they look at Biden, they do see a return to more traditional American politics, perhaps a more traditional American leadership in the world, and also just names that Biden is bringing in. You know, you think of names like Antony Blinken, who's someone who really speaks perfect French, who knows Europe well, who knows the workings of the European Union. That's someone who is completely different to Mike Pompeo, who was seen here in particular as very hawkish, America first on the foreign policy. So they do hope that this will serve to rekindle ties in some ways. But I would note also there are areas where we could see tension. Of course, one would be China. The United States, even under Biden, is expected to still take a very tough line on the Chinese. The Europeans just signed an investment deal with China. And then secondly, this idea that I know we repeat all the time on the show, but it's this European strategic autonomy, meaning that the Europeans do say they want to have a bigger voice in the global stage and they want to set their own policy. And just to give you an idea, today the Eurogroup, when they're meeting via conference, they will talk about strengthening the euro to potentially perhaps in the future compete with the dollar as a super safe haven. I mean, it doesn't mean that it's going to happen, but it does signal the direction of travel in which they say from now on we have to be much more strategic and we have to be much more independent, perhaps owning to the Trump legacy that Europe should not follow the U.S. blindly going forward.
All right, and turning to the other key partnership coming into play, the U.S. and the U.K. Kathleen Hunter, how special will this special relationship be under Biden with Bojo?
Well, I think that certainly Boris Johnson is really looking for a bit of a reset here when it comes to U.S.-UK relationships. I think that, you know, obviously Joe Biden and Boris Johnson don't have necessarily the closest of relationships between a U.S. president and an incoming U.S. president and the U.K. prime minister. I think that there has been, obviously Biden's not a huge fan, to put it mildly, of Brexit. There was a pretty stern rebuke from Biden over the summer when it looked like Boris Johnson might be, breaking the law over Ireland, and that was not received very well from Joe Biden, who is of course of Irish ancestry. So I think it's a bit of a rocky relationship. I have a hard time coming up with a better recent historical example of an incoming U.S. president with a scratchier relationship with Downing Street. And so I think it's an opportunity for a reset, but I'm not sure that it's going to come so easily.
All right. Thanks very much to our reporters, Maria Tadeo in Brussels and Kathleen Hunter in London. Let's take a look now at what's on the move this morning. HSBC, in terms of what we've heard from executives most recently, today we hear from the chairman giving hints of a looming strategy revamp. Now, I'd say in terms of HSBC, yesterday we heard from the CEO, at least in terms of a letter that he sent to an activist out of Hong Kong whose accounts, not only this activist's accounts were locked, but the accounts of his family were locked by HSBC. And Noel Quinn reached out to explain why, and although the reason is pretty clear, the Chinese Communist Party ordered that. So Stellantis rising in Milan on the second day of trading, now up more than 4%. I think yesterday they were up 7% and change. So this is over 2 days gaining a tenth. But to be fair, it was at this level if you look at the chart last week as well. Lint is actually down. Now, I know that sales dropped, but Lint sees strong demand for, strong demand growth for premium chocolates as the economy recovers, as lockdowns come to an end. I feel like I've been eating more chocolate than ever under lockdown.
Yes.
And that is saying a lot, Anna, because I put this stuff away. Coming up, British firms tell Rishi Sunak they need urgent help to survive the lockdown. We'll discuss with the Director General, the UK's biggest business lobby group, the CBI. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. 30 minutes into the session, we're looking at gains. The DAX holding up almost 0.5% right now. The FTSE gaining 2/3 of 1%, and the CAC 40 up about 1/3 of 1%. It's interesting that we saw a headline coming across from the Bild Zeitung, the German newspaper earlier, that Angela Merkel would only extend our lockdown to February 15th. We had been expecting an 8 to 10 week extension. We'll get those details confirmed throughout the day, but it should be interesting for companies' profits here as well. You can see that banks are doing the best. Energy is the second best. Healthcare following that up. At the bottom of the stock 600 is retail and, Anna, help me out here, CP&S, consumer products
consumer products and something
silverware?
meaningless. Services.
Yeah. Soap. It may be soap. Consumer products and soap. In any case, it's down a little bit, as is media. Let's get the Bloomberg First Word News. For that, we go to Laura Wright in London. Laura?
Thanks, Matt. Italian Prime Minister Giuseppe Conte is facing a crucial confidence vote in the Senate today after winning the backing of the lower house of Parliament. Last week, former Premier Matteo Renzi pulled out of the governing coalition, leaving Conte without a majority. A defeat would force him to offer his resignation to the president. The incoming Biden administration plans to block President Trump's plan to allow travel from the EU, UK and Brazil. The White House was planning to rescind the ban due to new rules on testing, but a spokeswoman for Biden says the new president will keep the restrictions on the advice of his medical team. White House officials don't expect President Trump to pardon himself, family members or close aides, but sources tell Bloomberg that clemency is in the works for a famous rapper and others. He's expected to announce the list of pardons later today. There was speculation Trump would try to pardon himself. He previously claimed he had the power, but it's never been attempted. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Matt, Anna.
Laura, thanks very much. Laura Wright here in London. Rishi Sunak, the British Chancellor, is trying to ease the concerns of British business. He has promised major investments to reinvigorate the UK economy. In a call with executives of 30 firms last night, Sunak pledged to spend on major construction projects as well as skills and innovation. Joining us now is Tony Danker, CBI Director General. Good to speak to you, Tony. Welcome to the programme. Just on those commitments from the Chancellor, Rishi Sunak, he says he plans to invest in infrastructure, skills, innovation. I can think of many times in UK history where that's been the mantra. What would you like to add? What are you particularly looking for from the Chancellor right now?
Well, look, I think the Chancellor has a budget in March, which is interestingly timed because I don't think he expected that we'd be dealing with extended lockdown and the coronavirus crisis and its restrictions on the economy being as bad as they are now. So really, we're looking for two things from the Chancellor. The first is to take action on COVID and financial support for COVID now, before we get to the budget. It all expires at the end of April, and businesses are going to start making decisions before the budget, so he needs to act on that stuff now. And then secondly, when it comes to the budget itself, let's get focused on business investment. I mean, the Chancellor's on the right themes, but we're going to have to do stuff to get business investment moving. You know, our forecast for the economy says that it's going to be all government spending and consumption if we're not careful. And I think if the Chancellor wants to improve the fiscal position in the medium term, then getting that investment he describes, getting that business investment as soon as possible, is really the order of the day for the budget.
How would you suggest he goes about encouraging further investment, Tony? Is this about tax breaks? I mean, we have very low interest rates, if that's not enough.
Well, look, I think the big priority we've put forward is comprehensive business rates reform. We have a business rates reform in Britain. Many of your viewers may not be aware. It's one of the highest property taxes in Europe. Not only that, it has this perverse disincentive to be net zero friendly. The more you improve your property in order to be environmentally friendly, the higher the business rates you end up paying. So when we've spoken to businesses up and down the country, their priority to unlock investment is comprehensive business rate reform. And then all those kinds of stimulants to business investment are important, be it coming forward with more policy and clarity on the government's 10-point green plan, which will really in turn unlock private sector investment, or having some tax incentives around R&D tax incentives or SMEs who want to spend on technology. That's the kind of stuff that will get our economy moving again.
What about working with the Chinese? How difficult is that going to be when we have issues like, Hong Kong activists flee back to England and find their bank accounts locked? I mean, I know that it could be lucrative to work with them, and then on the other hand, there are issues with democracy and freedom of speech there. So how do you feel about that?
You're asking me from a CBI point of view?
Sure, or be the business.
Yeah, look, I think that we obviously need to have a reset moment on where we are in relation to Chinese firms and investment. Chinese firms offer the potential for increased investment in UK infrastructure and the UK economy, and we want to take advantage of that. Obviously, strategic national assets from a national security point of view are a business for the government, but I think the Chinese can play an active role in our economy, and we'll defer to government when it comes to national security and international diplomacy, but they're clearly an important part of the mix.
So we'll see how that relationship evolves, in particular with the new president in the US. What about areas where the UK can cut red tape, Tony? This seems to be a bit of a talking point at the moment, post-Brexit, with a new trade deal in place. The government seems to be consulting with business on where red tape can be removed. Where would you like to see that happen?
Well, you're right, Anna. This is the talking point in UK economic and business circles at the moment. There's certainly a desire on the part of the government to take advantage of newfound freedoms outside the European Union, and that sounds like a principle we should get behind. What we don't yet have are real clarity, real clear proposals about where we want to re-regulate. I don't think people are in the mood for deregulation in terms of a race to the bottom, but there may be opportunities for smarter regulation, regulation that's a bit more up to speed in terms of, for example, the digital economy and digital realities. And for me, the most important area we talk to our members about is re-regulation in favor of business investment. So often regulation is trying to balance, consumer prices with investment. It may have gone the other way in terms of in favor of consumer price protection, and we've got less in the bank, so to speak, for business investment. So I think the area of most interest to us is how can we unlock more business investment? How can regulation be pro-investment? But you're right, that's the talking point in British economic policy at the moment, but not yet a lot of specifics from the government.
Okay, and it all comes back to that investment theme. So as we head towards the start of March in the budget, we'll keep that in mind. Tony, I just want to get your thoughts on the friction that we've seen in UK-EU trade in the early days of the new trading relationship. How much of that friction do you think is teething trouble, and how much of that friction do you think is just by design? It was intended to be this way.
Well, look, I think it is teething troubles, but the reason why we have to get on it straight away is that probably a lot of firms have held back. They're waiting until teething problems to settle down before trade flows really return to normal. From our intelligence, the biggest problem actually is the GB-NI border. Dover-Calais is still bad, but not as bad as the GB-NI border. And obviously, Northern Ireland was always going to be the most complex part of the deal. The other thing that's holding people back, I think, is confusion around rules of origin. The guidance from the British government to firms about the rules of origin that you need to comply with if you want to get tariff-free trade is still incredibly confusing to British businesses. So I think if we're going to unlock this and make it, as you say, Anna, just teething problems, we've got to get in control of those border flows because the full volumes are yet to really hit us. And secondly, we've got to get some clarity around this issue of rules of origin and how firms can provide the necessary evidence and paperwork that they're compliant and therefore eligible for that tariff-free trade.
Okay, thanks very much, Tony. Good to speak to you. Tony Danker, the CBI Director General. 8:39 here in London, 9:39 in Paris or Berlin. Coming up on the programme, Revolut eyes expansion beyond its fintech roots. We will speak to the chairman of the business, Martin Gilbert. That conversation next. This is Bloomberg.
Welcome back to Bloomberg Markets. This is the European Open. We are 43 minutes into the session right now and looking at gains. The FTSE up about 0.5% and the DAX gaining about 1/3% as we await here in Berlin the government's ruling on how hardcore the lockdown is going to get and how long the extension will be. So far, we've heard pretty good news. Bild Zeitung saying that Merkel's only going to extend the lockdown to February 15th. So, with that, startup Revolut has big ambitions beyond its fintech roots. This month, it asked UK regulators for a full banking license, enabling it to offer overdrafts, loans, and deposit accounts. We've been talking about it here on this program. Joining us to discuss further is Martin Gilbert. He is the chairman of Revolut. Of course, he's the founder of Aberdeen Asset Management and the former head of Standard Life Aberdeen. He has a new position as deputy chairman of River and Mercantile Group. So continue to be, Martin, a very busy man, even throughout the pandemic. Let me start with Revolut and ask you what your vision is for this company with a banking license.
I think to be one of the global super app, and obviously part of that is to apply for a UK banking license. We're not underestimating the difficulty, by the way, of applying for a UK banking license, because quite rightly they're not sort of handed out like confetti, but we believe we've done a lot of work, and we believe we're pretty well prepared for the application.
And good morning to you, Martin. And in order to go through with that application, it seems that Revolut has appointed a number of really experienced, such as yourself, people from finance backgrounds. And I wonder what that tells us about the cultural differences between these startups in fintech and where you need to be if you want to operate in the UK banking environment. What are your reflections on the big cultural differences you've spotted since joining?
Oh, no, I mean, I want to make clear I love the culture at Revolut, and it reminds me of the early days at Aberdeen, which is you concentrate on growing the business and running it and doing well. But when you do apply for these sort of regulated licenses, you need a balance, and hopefully I and my colleagues can provide that balance to the company, but I do stress we're not out to change the culture of the company. We're just out to improve it in terms of regulation, and we've come a long way actually in the last 2 years. The risk function and the customer service function have all developed hugely over the last 2 years.
I wonder what you can do there. With your background and given the nascent kind of business, the kids want to get into asset management maybe through these kind of apps, right? ETFs have become a huge and growing business. People want passive investment help. Do you see a future like that for Revolut?
Yeah, I think so. I mean, there are no plans at the moment to develop a full asset management capability. But I do think that a generation below me would prefer to manage their money on their phone rather than through a private banker or that type of channel. So yeah, I think it is something that will inevitably come to fintech, because asset management is being disrupted at the moment. As you said, this big shift from active to passive. That's led to lower fees, and of course the third big headwind that the industry has is public to private, and that is a trend that the individual retail investor has so far found difficult to participate in. It's largely been the domain of institutional investors. So yeah, I do think eventually there will be asset management on the app. I think it will be pointed much more towards passive and ETFs, as you suggested, because as I say, the generation below me are quite more conscious on fees. So yeah, I think there's I think fintechs will embrace that channel.
And talking about opportunities, Martin, where do you see UK finance finding those opportunities? Not just the City of London, but the financial services industry more broadly across the UK. There's a lot of focus on whether we will get this equivalent status with the EU. And I wonder if that should be a focus, should be a preoccupation, or maybe there's opportunity in divergence.
I think there's opportunity in both. You definitely want equivalence because it will make it. If I look at it in asset management, it will make it. The fund managers will be located in London. Now, clearly the Europeans would prefer the asset managers to be positioned globally in markets such as Dublin, Paris, Frankfurt, because where the asset managers are tends to dictate a lot of where the banks are. So that service these asset managers. So in asset management, yeah, we definitely want to have equivalence. We also want to develop fintech, and we are a global center for fintech. So we clearly want to keep that lead. It's a great area, and it's great fun as well. I mean, and great fun being part of something that is disrupting traditional financial services. And you either disrupt yourself or you will get disrupted by someone.
It's funny. I mean, the importance of the city doesn't seem it doesn't seem so key coming from Aberdeen or from Edinburgh, Martin. I mean, you've proven that important financial activities can take place elsewhere. Why doesn't the capital of the financial world shift to Frankfurt or to Amsterdam or to Paris?
I think we underestimate the infrastructure that exists in London to service the financial service center that is located there. And I suppose it's where people are based, basically. It would mean uprooting to other cities, and much as I love going to Dublin or Frankfurt or even Paris, they're not as big, especially Dublin and Frankfurt are not as big as London in population. So I think that's something. But I don't think we in the UK should underestimate the threat from these satellite financial centers in the future. Because if we do underestimate it, again, we will be disrupted, and people will offer good tax benefits to move, these sort of things. So yeah, we've got to be wary in London about the growth of these financial centres.
Martin, thanks very much. Thanks for your time. Martin Gilbert, the founder of Aberdeen Asset Management, chairman of Revolut and deputy chairman of River and Mercantile Group. Coming up on the programme, which market faces the biggest risks as the US presidency changes? What does the handover mean for markets? We will put that question to the Market Live's Christine Aquino. This is Bloomberg. Welcome back to the European Market Open. 53, nearly 54 minutes into your trading session. European equity markets moving to the upside. There are risks around, though. We need to focus on the political risk coming out of Italy. Italy's Prime Minister Conte is speaking now in the Senate ahead of a confidence vote. He survived the vote in the House. Now it is the turn of the Senate. Joining us now to think about this and other market themes this morning, Christine Aquino, who leads our Markets Live team here in Europe. Christine, what kind of risk are we seeing the market price in when it comes to Italy? We've seen a little bit of a push up in spreads this week. BTPs over bunds. I mean, on a longer term chart, you have to look really carefully to see it, but it was there this week.
Yeah, absolutely, Anna. I think, the main risk that markets are really watching out for is what does this mean for the prospect of snap elections in Italy? Because that is kind of ultimately what we've seen rattle markets in past instances of Italian political unrest. Really kind of what does this mean for the calculus of a new government? But as you say, it is very, very minute. The moves that we've seen in bond markets, Italian 10-year yields are just over 60 basis points as we speak. That's a very far cry from the 3% that we saw at the height of market turmoil last year, and even in previous bouts of Italian political uncertainty. So, it's an incremental move in markets. There is that risk that they're watching out for regarding the snap elections, but at the moment, it's a very measured reaction.
I want to ask what kind of answers you're getting on the question of the day, Christine. On the MLive blog, you ask, which market faces the biggest risks as the U.S. presidency changes? What are you hearing?
I think, Matt, a lot of the markets that have gotten a lot of attention regarding the question of the day are really these asset classes that look particularly crowded. Incidentally, we just got some data from Bank of America regarding their January fund manager survey showing that the most crowded trade is long Bitcoin followed by long tech and short U.S. dollar. And, that really tells you kind of what are the asset classes that are sort of in danger as we face this big transition period regarding U.S. policy. Now, keep in mind, of course, that just because it's a crowded trade, that doesn't mean that there's an imminent reversal coming soon. We've certainly seen that in the case of the short dollar trades. We've seen a lot of people calling for a reversal of that move, but we haven't really seen that transpire just yet. But all the same, these are kind of the most crowded trades. It'll be interesting to see how that plays out.
Yeah, markets can stay crowded for a little while, or trades can stay crowded for a little while, which is more than you can say for real life these days, Christine, with the pandemic. Christine Aquino, who leads our Markets Live team here in Europe, thank you very much for joining us. Surveillance is up next. Matt and I are off to Bloomberg Radio. This is Bloomberg.
Italian Senate showdown. Giuseppe Conte wins a first vote of confidence, but the real test comes today in the upper house. Yellen on the Hill. Biden's Treasury Secretary pick is set to tell the Senate that it's time to act big on stimulus. And Trump's last day. The president is expected to issue pardons, but not to himself or family members. He leaves his term with a 34% approval rating. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, the market firmly focused on two things. Firstly, it's all about what Janet Yellen will say in front of that Senate committee. She's not only expected to, of course, it's not really an interview for the top job, but she needs to be getting vetted as Treasury Secretary pick. But it will also be a way of her to explain exactly what they're trying to achieve with the recovery plan. We're also getting some news out of the IEA, cutting its oil demand forecast as new lockdown, of course, temper the recovery. This is something that we had talked about with the IEA in the last couple of weeks, but I did want to show you Brent crude at 55.21. The focus is firmly on Janet Yellen as she explains the recovery and exactly that $1.9 trillion stimulus package. And it's also on the impact it has on demand for oil. Now let's get straight to the Bloomberg First Word News. Here in London is Leanne Gerrans. Hi, Leanne.
Hi, Francine. President Donald Trump is ending his term in office with historically low approval ratings. According to a Gallup poll, his approval numbers have dropped to 34%. He's already had the weakest average rating of any president back to the 1940s when the survey actually began. His final 2 weeks saw a significant drop in support amid the storming of the Capitol and his second impeachment. Now, White House officials don't expect President Trump to pardon himself, family members or close aides, but sources tell Bloomberg that clemency is in the works for a famous rapper and others. He's expected to announce a list of pardons later today. There was speculation Trump would try to pardon himself. He previously claimed he had the power, but it's never been attempted. And UK Prime Minister Boris Johnson plans to host an expanded G7 summit. That's in June. It's worrying some members who fear the UK may be trying to restructure the group. Johnson wants to establish a so-called D10 coalition to counter China and other authoritarian states. He's also keen to project the UK's influence now that it's left the EU. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now let's talk about Italy's political situation now, and the country's Prime Minister Giuseppe Conte faces a high-stakes confidence vote today in the Senate. A narrow win would allow him to stay in power, while a defeat would force him to offer his resignation. Well, joining us now is Carlo Cottarelli. He is former IMF director and public finance monitor director at Università Cattolica del Sacro Cuore. Mr. Cottarelli, as always, thank you so much for joining us. What's the mood like in Italy right now? Is there a danger that Mr. Conte has enough votes in Senate, but actually doesn't really have any real power to push the recovery through with reforms that Italy so badly needs?
The general mood is that many people are surprised, very surprised by what happened. It was something that nobody would have expected a couple of months ago or even at the beginning of December. The controversy relates to the design of the recovery plan, but the government had made, the issue has been raised by Renzi and his party, and his small party. But since the beginning, the plan has already been changed quite a lot in the direction that Renzi wanted. So it's not clear why Renzi at one point decided to pull the plug. At the same time, I was very surprised yesterday when Prime Minister Conte, in his speech at the Camera, clearly said that there is no way to have a reconciliation with Renzi. So it seems to be that a lot of this has to do with personalities at this point, and it's not clear what is going to happen now.
Okay, personalities aside, what needs to happen with the reforms? What needs to happen to make sure that this recovery fund puts Italy on a better, more solid footing?
The plan as it stands now has some positive aspects. There is an emphasis on putting more money in public education, for example, building human capital. A lot of emphasis, perhaps even a bit too much, on public investment. There is not enough, in my view, enough effort to introduce the reforms to make it easier for the private sector to invest in Italy. So reduction of red tape and bureaucracy, having a justice system that works much better than currently. Perhaps even have to have a tax reform that makes the tax system simpler and lowers the tax rate. And none of this is in a very meaningful way in the reform package that is put forward by this government. And I think that the European Union will insist to have reforms in these areas too.
But is this something that I mean, the reforms asked by the EU, will it be counterproductive? Will it actually make a faction of the Italian citizens against the EU? Or is it necessary reforms? Is it things that actually Italy should have done a long time ago?
No, I don't think that anybody in Italy would be against a reduction of red tape, a reduction of bureaucracy, a justice system will work better. The reason why the government has not put forward this in its plan is probably that they don't regard this as a priority, which is a mistake. They put a lot of emphasis on something that is important, like public investment. Public investment is not the only thing. It's possible that during the discussions with the European Union manages to convince the Italian government that they need to put these things like a reform of the bureaucracy as a priority, as a condition for growth in Italy, led by private sector investment.
Mr. Cottarelli, do you think that personalities, as you started by saying at the beginning of this interview, is getting in the way of Italian recovery?
I'm afraid yes. The answer is yes. Now, we still don't know how this crisis will be resolved. It's possible that Conte will go ahead with the government that does not have an absolute majority in the Senate. It already happened in the past. And they may go, legally they can go ahead. The issue is whether that will be a government that, already now the government is relatively weak. And even weaker government may be then unable to push forward the reforms with the energy that is needed, given the time constraints. Also, Italy is in a crisis. Leaving aside the money that needs to be received from the European Union, we need to introduce reforms as soon as possible because Italy has been lagging behind other countries for 20 years and there's no time to lose. There is no further time to lose.
Carlo Cottarelli, talk to me a little bit about what you think the trajectory is for Italy. Is there going to be a reckoning point when the ECB actually has to start normalizing monetary policy? And are you hopeful that Italy will be able to deal with that reckoning moment?
It depends on when it comes. Certainly we need time to restart the engine of the Italian economy and put Italy on a growth trajectory of at least a growth rate of 2% per year. In the last 10 years, we did 0.2% per year, leaving aside this 2020. So we need to have some time for reforms. I don't think that the data on reckoning will come soon because I think the monetary policy will remain extremely expansionary for the foreseeable future. Certainly this year, probably most or at least the first half of 2022, or even perhaps later. But it's clear that now we depend very much on these very low interest rates, on the financing from the ECB. The ECB is purchasing Italian government paper both last year and now for an amount that is equal to the deficit, to the whole deficit. So if the Italian deficit is entirely financed by the ECB in practice, although the ECB is not doing this for the purpose of financing Italian debt, but that's the result. And so we're entirely dependent on that. And so we have to hope that that inflation stays low. If inflation stays low, the monetary policy will continue to be very relaxed in Europe. But if inflation for some reason goes up, which is not the case now, but it may go up in the future, then it's going to be quite difficult. We have a debt to GDP ratio, public debt to GDP ratio at the end of last year of 160%, which is the top level since the Italian nation was formed in 1861.
What do you think, given where we are ahead of the Senate vote, Mr. Cottarelli, that a technical government would have more success than a cobbled together coalition at the last minute?
But it depends. The technical government had the support, had a very large parliamentary majority. Yes, but I don't see now a very broad parliamentary majority, a sort of national unity government being formed. The current opposition, Lega, Fratelli d'Italia, they know very well that if there are elections, they're going to win. Perhaps they are going to get perhaps 60-65% of the seats in parliament. So they have no interest of forming a technical, of supporting a technical government, a national unity government. They have elections. If there are elections, they form on their own a government that is quite can benefit from a very strong majority in parliament.
All right, thank you so much for joining us today, for your time. Carlo Cottarelli, there, the former IMF director. Now, coming up, it's a big day for Janet Yellen. Biden's Treasury pick has her Senate confirmation hearing and will have to sell his blockbuster stimulus package. We have the story next. This is Bloomberg.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, the Biden administration begins tomorrow, but Janet Yellen's work starts today. At 10 a.m. D.C. time, her confirmation before the Senate Finance Committee begins, and so does her sales pitch for Biden's nearly $2 trillion stimulus plan. Let's get more with Mark Cudmore from our Bloomberg MLive team. Mark, great to have you on a really important day like today. What exactly are you going to be watching out for later?
I think probably the most important thing to watch for is actually the tone and type of questions that we get from some of these senators there, and from in terms of the Republican side. We know pretty much exactly what Yellen will say. We know what her beliefs are. She's had a long time in the public eye. We know that she's focused on inequality. She's focused on the labor market. We know that she's quite dovish. We know that she wants more stimulus. We know her views on the currency side. So I think that unless there's a surprise, it's more about the tone in questions, and that will give us an idea of how likely the stimulus package is to be passed as is proposed, or how watered down it will be. Of course, there's a tail risk that she makes a mistake and makes a blunder, but personally, I think Janet Yellen is just far too experienced. She knows that a misspoken word can move markets significantly, and I think it's most likely she won't fall into that trap of making a blunder, no matter how hard the questioning is.
Mark, apart from a blunder, is there anything actually that you want to know or understand, or that markets want to understand from her when it comes to this stimulus package?
Well, I think there's two things that markets want to know about. So before the stimulus package, I think there's obviously the currency view is the one that markets are most focused on. However, we appear to know what she's going to say about that, and I think it'll be interesting to see if there's any extra reaction from markets when the currency view is expressed as she's looking for a market-based currency. She might get some follow-up questions around that because she has been someone who's been in favor of a weaker currency before, saying it helps the U.S. economy, and that's against the previous tone of some previous Treasury secretaries in terms of going for the strong dollar policy. So she might get some follow-up questions there. I think on stimulus, as I said, it's less about what she says, because we know her views. We know the Biden plan. They know what she wants. We know she's focused, as I said, on this K-shaped recovery, the fact that it's a very unequal recovery, and she wants things like, minimum wage, state aid, much more to help people who are struggling at the lower end of the income spectrum. But again, it's much more about the tone of the questions. How aggressive are the questions? Are these questions that are very much seeking to undermine the plan, or are they genuine questions of, wanting to get more knowledge on her views? So I think in many ways it's more about the questions she's dealing with as opposed to her responses that people in markets will be watching for.
What might, Mark, move markets over the next few days?
Well, I think there's a lot of potential things to move markets. I guess it's a little bit glib to say we don't know exactly which one it is. I mean, we're about to have a whole new U.S. administration in the U.S. And this comes after, obviously, a very controversial administration. And we know we're getting a big change in tack. Now, obviously, many of the plans that we're expecting from Biden have been made clear in advance. It's not like it's going to shock us. But I think that when we're just getting such a large shift, there's always a chance for a surprise. We will find out in the coming days, will there be a buy the rumor, sell the fact part of Biden's presidency? Will we get social unrest around the inauguration? Are some of these themes overpriced, or in fact is there more to price in some of these themes like the green energy? The stimulus package, we still want some more kind of clarity about exact details, how much will be infrastructure focused and how quickly that will come through. So I think there are a number of catalysts in the next few days. The problem is it's hard to identify exactly which one. The backdrop here is that we have a market that is very stretched on a theme that we all agree on. That's the fact is there's just too much money in the system. We have to chase assets, even though the valuations aren't very appealing.
Mark, thank you so much. Mark Cudmore there with the very latest, of course. He's from our MLive team, and there's some great stuff on the MLive. That's, of course, our daily blog, so I suggest everyone go and actually check it out. Now, we're also hearing from Giuseppe Conte. We're just talking to Carlo Cottarelli about some of the issues there if we don't have a strong majority for Mr. Conte. He says the government that they can steer the recovery, or he says Italy needs a government that can steer the recovery. We know that, but I think he's suggesting that it's only his government that can do it. And Italy's economy will need the support for all of 2021. Now, coming up, should governments and companies have been more ready for the catastrophic crisis which was starting to unfold 12 months ago? We discussed the risks the world faces in 2021. That's a little bit later in the program, and this is Bloomberg.
the trade war, delisting Chinese companies and banning transactions with mainland-connected apps. Just some of the policies Joe Biden must decide whether to overturn as he takes office. Among his decision-making team, incoming Secretary of State Tony Blinken. He's already indicated the pressure on China will continue, at least over its crackdown on democracy in Hong Kong. Commerce Secretary pick Gina Raimondo is another. Mainland mouthpiece Global Times notes her moderate stance on Beijing in the past. And there's Trade Rep nominee Catherine Tai, a fluent Mandarin speaker who wants to confront China over its trade practices. Joe Biden is said to want unity among Western powers, amid concerns Beijing could divide them instead by offering preferential market access. But he could have a tough time convincing traditional allies. The EU is the latest to reach its own investment deal with China. For its part, Beijing says the plan is to ease tensions. Foreign Minister Wang Yi is calling for dialogue to restart, and high-ranking diplomat Yong Jie will reportedly be sent to Washington to explore areas for cooperation. If US restrictions are not repealed, though, Beijing is ready. New rules mean the government can prohibit the application of foreign laws to its companies, including those issued by the United States. Joe Biden says he's not planning any immediate moves, a sign perhaps that the tools used by Trump against China are still on the table.
Those are some of the things to watch out for the coming months as Joe Biden takes over the U.S. presidency tomorrow. Now, more on the business, political, and economic implications, of course, of this presidency throughout the program. Now, let's get straight to your Bloomberg Business Flash. Here in London is Leanne Gerrans. Hi, Leanne.
Hi, Francine. German sandal maker Birkenstock is in talks to be taken over by CVC Capital Partners. Bloomberg's learned a deal could value Birkenstock at more than $4.8 billion. The company launched the sandals loved by hippies and preppies alike in the 60s, but the company's roots actually go back to 1774. Now, the French government is urging Suez and Veolia to find a friendly resolution to their takeover battle. The months-long stalemate was shaken up this weekend with the news of a possible rival bid from two private equity firms. Suez wants to discuss the offer, but Veolia, which owns nearly 30%, is only willing to talk about a takeover. And European car sales plunged the most on record last year. Demand recovered somewhat in the second half of the year, but couldn't make up for the collapse during the initial outbreak of COVID-19. Electric vehicles were a rare bright spot. Bloomberg New Energy Finance estimates that Europe's e-car sales topped China for the first time. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Now, we're just getting some breaking news out of Giuseppe Conte, of course, after winning a basically vote in the lower house of parliament late last night. He now faces the Senate. Mr. Conte just giving a speech talking about exactly what Italy needs right now. Now, global markets, of course, are climbing ahead of the speech by Treasury Secretary nominee Janet Yellen, in which she's also expected to call for expansive government action to bolster the U.S. economy. Markets are not only watching Janet Yellen, but they're also watching the inauguration yesterday. If you look at the advance, it's pretty broad across equities, futures on the Russell 2000 of small cap companies registering also strong gains. 10-year yields in the U.S. climbing back to 1.1%. Oil prices and emerging markets also advancing. Coming up, make sure to catch our full coverage of Joe Biden's inauguration tomorrow. We'll bring you the latest from 4 p.m. London time. This is Bloomberg. another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, we are alerted by tweets that actually Matt Hancock, the health secretary here in the UK, has to self-isolate because he's come into contact with someone from COVID-19. Now, we don't know what that is. We understand that he was actually alerted to this by the NHS service, probably through what we call track and trace, which is the UK system. But of course, we'll keep an eye on it and we'll see whether it changes any of his plans in the coming week. Now, let's get straight to the Bloomberg. First word news here in London is Leanne Gerrans. Hi, Leanne.
Good morning, Francine. Italian Prime Minister Giuseppe Conte is facing a crucial confidence vote in the Senate today after winning the backing of the lower house of Parliament. Last week, former Premier Matteo Renzi pulled out of the governing coalition, leaving Conte without a majority. A defeat would force him to offer his resignation to the president. Now, the incoming Biden administration plans to block President Trump's plan to allow travel from the EU, UK and Brazil. The White House was planning to withdraw the ban due to new rules on testing, but a spokeswoman for Biden says the new president will keep the restrictions on the advice of his medical team. And it's time to act big on stimulus. That will be the message from Treasury nominee Janet Yellen at her Senate confirmation hearing today. It'll be the first time lawmakers will get to vet the president-elect's $1.9 trillion rescue plan. According to her prepared remarks, she'll say with borrowing costs so low, now is the time to spend. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, President Donald Trump is ending his term in office with a historical low approval rating. According to a Gallup poll, his approval numbers have dropped to 34%. He's already had the weakest average rating of any president back to the 1940s when the survey began. Now, his final 2 weeks saw a significant drop in support amid the storming of the Capitol and his second impeachment. Well, Bloomberg's editor, Michelle Jamrisco, joins us now for more. She previously was in Washington, where she was a former White House and Congress reporter. Michelle, great to have you today. It's Trump's last full day as president. What do we actually know about how he will be spending his remaining hours?
Good morning, Francine. Certainly an unusual end to a presidency, to say the least. Well, what we know from the official White House schedule for several days has stated that he will work from early in the morning until late in the evening and make many calls and many meetings. But what we do know from private reporting, of course, just removing the vagueness of his schedule, we have more confidence in what he won't be doing. There's a lot he'll be skipping. First, in terms of the usual ceremonial duties of an outgoing president, he won't be welcoming President-elect Joe Biden and his wife Jill to the White House, which is typical and customary the day before inauguration. He'll also be the first president since Andrew Johnson to skip the inauguration altogether. But what we do expect is that he'll issue a number of pardons on Tuesday, which is typical for outgoing presidents. Though our reporters have talked to people familiar with the matter who say that the White House counsel hasn't prepared preemptive pardons for Trump or his family, which had been a big question, of course, amid the second impeachment trial upcoming, as well as many court cases that he will be subject to upon his post-presidency. So we might expect that he could sign more executive orders, as he has in recent days, sometimes for trivial things like a statue garden for who he deems American heroes. But any of these things could be easily overturned once Biden enters office. So finally, on Wednesday morning, there's expected to be something of a celebratory send-off awaiting Trump at the Air Force Base just outside D.C., from where he'll take his last Air Force One ride to Florida and begin his post-presidency. So a lot awaiting him in the post-presidency, though I think safe to say that he won't go out quietly, even as he's losing the so-called bully pulpit as president, Francine.
Yes, and if we unpack some of the things that actually you were pointing to there. So we're not expecting him, the President Trump, to pardon him or those closest to him. Who could he pardon?
Well, any number of people. I mean, he's kind of had this somewhat odd and at odds with some of his other policies. This sort of policy of removing people who've had long-term drug crimes. He's kind of done favors to certain people who have petitioned for removal from sentences. So people I've seen. Snoop Dogg, the rapper, has actually petitioned for certain people in his orbit. So there's always a number of requests of an outgoing president to commute sentences or to pardon, others who might be in legal trouble. So we'll just have to see, who Trump picks in that basket and how many that there might be. There could be, hundreds. There could be dozens. But we do believe at this point from reporting that it won't be himself.
Michelle, and apologies because I think I just called you Ellie by mistake. Michelle, what are we actually expecting to hear President-elect Biden say tomorrow at the inauguration?
Well, I think you'll hear a message of just focus, first of all, on the pandemic. We do have a very interesting and unusual security backdrop, of course, from the Capitol mob, fallout, as you suggested, as well as, of course, the pandemic and the restrictions therein. But what we will expect to hear is a message that he's tried to preach of unity. He's, of course, also petitioned in the past week. We've talked about the $1.9 trillion stimulus package that his, soon-to-be potentially Treasury Secretary Janet Yellen will do the bidding for this week as well. And he plans to issue many executive orders at the start of his administration, both to reverse Trump policies and to push some of his own. We know he's talked quite a bit about rejoining the Paris Accords as soon as he gets into office. And so that and other, issues that are close to his heart beyond the virus fighting will certainly get a look in the first 100 days.
Great, thanks so much, Michelle. Shamorsko there with the very latest, of course, on the inauguration tomorrow. Now let's shift gears and talk about the Middle East. At the beginning of the year, Saudi Arabia and its allies restored diplomatic ties with Qatar after a 3-year rift. The dispute centered on accusations it was bankrolling militant groups and undermining attempts to isolate Iran. While speaking exclusively with Bloomberg's Simone Foxman, Qatar's foreign minister has once again called for a summit between GCC leaders and Tehran.
The time should come where when the GCC will sit on the table with Iran and reach a common understanding between the countries that we have to live with each other. We cannot change geography. Iran cannot move GCC away from its neighborhood, and the GCC cannot move Iran away from the neighborhood.
Is that time now with a Biden administration that looks perhaps like it may return to the 2015 nuclear deal?
Well, we hope that what will happen between the U.S. and Iran, and we hope that they are going to reach a solution with what's happened with the JCPOA. That will help between the GCC and Iran. Of course, everything is interconnected at the end of the day.
Do you want Qatar to be the center of those discussions? Oman played a very large role last time around. Is this something that you see yourself?
For us here in Qatar, what we want the accomplishment. We want to see the deal happening. Wherever it is, whoever is conducting this negotiation, we are going to support him. If Qatar will be asked by the stakeholders to play a role in this, we will be welcoming this idea. We maintain a good relationship with the U.S. We maintain a good relationship with Iran. Iran is our neighbor. We have borders together. They have stood with us during the crisis and supported all our logistics lines. And I believe there is a mutual respect between the countries that allows Qatar to play such a role. But I'm reaffirming that if any country is going to play that role, Qatar will be fully supportive for that and will not do anything unless it's being asked by the parties.
Well, it looks like South Korea is perhaps reaching out to Qatar for assistance in resolving the tanker and the crew that are detained in Iran. What assistance are you providing them, if any, and what's the situation right now?
Well, with the South Korean tanker crisis, we have received the request from the Korean government. Right now, we are working on it with Iran and to find a way. They are talking to each other directly, actually, and they might just need Qatar support for the process, but they have their own direct link. And our response to our friends in Korea that whatever we can do to help, we are going to help. We are talking to the Iranians, and we hope that we can help in facilitating any of the talks for the release of the tanker.
Well, that was Qatar's foreign minister speaking exclusively to Bloomberg's Simone Foxman. Now, coming up, should governments and companies have been more ready to the catastrophic crisis which was starting to unfold 12 months ago? We discuss the risks the world faces in 2021. That's coming up next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gibbons. Hi, Leanne.
Hi, Francine. European car sales plunged the most on record last year. Demand recovered somewhat in the second half of the year, but couldn't make up for the collapse during the initial outbreak of COVID-19. Electric vehicles were a rare bright spot. Bloomberg New Energy Finance estimates that Europe's e-car sales topped China's for the first time. Now, German sandal maker Birkenstock is in talks to be taken over by CVC Capital Partners. Bloomberg's learned a deal could value Birkenstock at more than $7.8 billion. The company launched the sandals loved by hippies and preppies alike in the 60s, but the company's roots actually go back to 1774. And the French government is urging Suez and Veolia to find a friendly resolution to their takeover battle. The months-long stalemate group was shaken up this weekend with the news of a possible rival bid from two private equity firms. Suez wants to discuss the offer, but Veolia, which owns nearly 30%, is only willing to talk about a takeover. Tesla has begun delivering the first Model Y SUVs built over in China. It's the second locally built electric vehicle Tesla has sold in China. Last year, the Tesla Model 3 was China's most popular electric car. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Now, 2020 saw an unprepared world face the biggest challenge of recent times. But should governments and companies have been more ready for what was starting to unfold 12 months ago? Well, this year's Global Risks Report by the World Economic Forum says a catastrophic pandemic was an event which had been signposted as a potential danger for the world. Now, looking ahead, the WEF warns COVID will increase disparities and social fragmentation and could cause more crises for years to come. Now, it says that environmental concerns still top the list in terms of likelihood and risk impact over the next decade. Well, joining us now is Eugénie Molineux. She is Chief Risk Officer at Commercial Insurance at Zurich Insurance Group and co-author of the report. Eugénie, thank you so much for joining us today. You and the WEF basically say that we should have been better prepared for the pandemic. Is this private companies or is this governments?
Oh, this is really everyone. This is governments, private companies, individuals. It's very important that when we look at the global risks landscape every year, that we act upon the risks that we see. So as you mentioned in your introduction, we were forewarned. We'd seen, for example, SARS and MERS, and yet failed to be prepared for this pandemic. And so that is probably the key lesson from COVID-19, and it gives us a particularly good lesson with respect to those 10-year horizon risks around climate and weather-related events, because there is no vaccination for those events.
Eugénie, you also, of course, are Chief Risk Officer at Commercial Insurance at a huge group. How do you prepare for something like a pandemic? I mean, we've had various lockdowns, and it doesn't seem to be that we're more prepared now than we were in March, apart from the fact that we have, pretty impressive vaccination results because the medical profession was so quick to find something that could counter what we're looking through.
Yeah, I do think one of the, silver linings to COVID-19 was we've seen the agility of the population at large. And I think that's something that we need to remember as we face the global risk landscape. What I would say is, in terms of preparation, it's key that you determine the direct and indirect risks that are facing, whether it's your country, your business, or you as an individual, You need to take a holistic view. It's not a matter about singling out one risk. So, for example, the equivalent would be the physical risks in COVID-19. It's not enough to single that out. You need to also look at mental health risks and risks to the economy. So you need to take a holistic view. You need to do an assessment about how you're positioned for those risks. And then you need to create a mitigation plan and act on it. Now, with fairly extreme risks, something like a pandemic, the way you might do that is to do a scenario. So in other words, imagine a pandemic hits and role play that out. And indeed, some governments did actually do that prior to COVID-19.
Yeah. But they're not necessarily the ones that did better in actually dealing with it, because you have a worst case scenario and you play it out, and then reality hits, and actually suspending an economy and telling people they can't leave their homes is something completely different.
Yes, indeed. As I said, the risk landscape needs to be balanced. It's not a matter of addressing one risk completely and then not addressing others. If you do that, you'll probably exacerbate the other risks on the landscape. And that's something that the Global Risks Report of 2021 kicks out. It points out that if we don't act on some risks, like rising inequality, then we'll risk increasing lack of social cohesion, for example, and that then in turn can lead governments to look inwards to deal with those problems, and then we will face the problem that we won't be able to come together multilaterally across the world to solve problems like climate change.
What is the one thing that actually we're underestimating? So everything you're putting right here, it makes sense. It's common sense. I imagine and would hope that governments are looking into this. But is it a problem of actually taking action, or are the biggest risks, what we don't talk about, which the pandemic, for example, was simulated but wasn't in the top 4 risks for 2020?
Yeah, I think it's a little bit of combination of both. So, for example, this report does not have a deep dive section on climate risks. That doesn't mean those risks have gone away. Indeed, in fact, they're populating to a large extent the top quadrant of risks. So those risks haven't gone away. The fact that we're not talking about it doesn't mean they've disappeared or that we've mitigated them. So it is important that we take action on the risks landscape that we see and, shall we say, be prepared. The problem is that typically what we see is that preparation is worth more than recovery in terms of efforts, in terms of reward. So it's quite key to be prepared and actually take action.
Talk to me a little bit about digital inclusivity. Do we underestimate the impact this could have for, rebellion or social unrest?
Yes, clearly. Clearly, it's one of the side effects of COVID-19. What's happened is we've accelerated the 4th industrial revolution. Now, the problem is, in the meantime, have we actually brought everyone along with us? So what do I mean by that? Training, for example, on technology for all people. So particularly people who may not be able to work remotely, because their jobs will change going forward. So one of the risks that we see with this acceleration is that you have whole sectors of society that may not be as digitally literate or as digitally trained as they should be. And they need to be trained rather in a hurry because more and more of those entry-level jobs are being automated. And so those jobs will disappear. And so we run the risk of creating, if you like, digital haves and have-nots in this world and exacerbating any inequality.
Thank you so much for joining us today, Eugenie Molyneux there, a Chief Risk Officer at Commercial Insurance at Zurich Insurance Group. Now, coming up, big bank earnings continue after a long holiday weekend in the U.S. Bank of America and Goldman Sachs kick off this week's earnings report. We have the details next, and this is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacquet here in London. Now let's get the latest on the earnings season. After a long holiday weekend in the U.S., Goldman Sachs and Bank of America are scheduled to announce their quarterly earnings today, followed by Morgan Stanley on Wednesday. Now the results follow Citi and JP Morgan, whose share prices slid on Friday after reporting a pretty tepid outlook. Joining us to discuss now all of this is Bloomberg's Danny Berger. Danny, what should we actually expect from results today?
Francine, the banks that have a really strong presence in capital markets and investment banking, that's really what's set to shine. So that's Goldman Sachs today, Morgan Stanley tomorrow. And that's because in the fourth quarter, we did see a pretty sizable pickup when it comes to things like M&A, when it comes to IPOs, and just more volatile markets, of course, means that trading desks are going to be doing better. And then on the flip side, what you see is some concern about the more consumer-oriented banks. That's perhaps why some of the ones that report on Friday, like JP Morgan and Wells Fargo, struggled more than the others. And this is really where the U.S. banks show their domination over the European ones. You have Goldman, Morgan Stanley topping the leaderboard when it comes to IPO advisors in the last quarter. You can see Europe doesn't even hit that board of the top banks. And so that's what's really going to help them carry through this quarter after what was already a very strong 3Q for these more capital markets focused banks.
What will investors be looking out for in the outlooks?
Stimulus is going to be really essential. This is something we heard talked a lot about in the banks that reported on Friday and indeed gave some reason for concern. JP Morgan CFO, for example, cited the fact that the bridge, yes, it might have been big enough in terms of stimulus for the consumer the first go around, but it needs to be longer. There needs to be more stimulus in order to get consumers through to the next part. So, for example, Bank of America, what their credit card data looks like is going to be important. We did get a little snapshot into it. We've seen that credit card data, at least the start of January, benefited from more stimulus payouts, but it sounds like these executives are going to express the need for more buybacks. Just their capital return plans are also going to be important. The Fed is now allowing U.S. banks to start again them issuing dividends and buybacks. We heard Morgan Stanley and Goldman Sachs in their last quarterly report express the desire to start them up again this quarter. So we're going to want to keep our ear out for that as well, Francine.
Thank you so much, our Danny Berger there with the very latest on some of these earnings from Wall Street. Now, Bloomberg Surveillance continues in the next hour. Tom Keene joins me out of New York. We'll, of course, looking forward to the hearing from Janet Yellen. We'll look at what that will do to the Treasury market. We have a full roundup of asset classes, and then we look to the inauguration tomorrow. This is Bloomberg. another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television. Italian Senate showdown. Giuseppe Conte wins the first vote of confidence, but the real test comes today in the upper house. Yellen on the Hill, Biden's Treasury Secretary Pig is set to tell the Senate that it's time to act big on stimulus. And Trump's last day, the president is expected to issue pardons, but not to himself or family members. He leaves his term with a 34% approval rating. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lapp in London, Tom Keene in New York. Tom, I've been reading quite extensively about Janet Yellen, and of course, her testimony, what markets are looking for, and what they want to ask, basically, Janet Yellen through the intermediary of the Senate committee. And then, of course, it's about the inauguration, a very different inauguration this 2021.
Yeah, we can go short-term Chair Yellen into Secretary Yellen, or yes, look at the history of the moment that we'll see tomorrow. Our coverage really beginning tomorrow bright and early. Francine, to Chair Yellen, I would go over the long weekend in the United States. Stimulus was at hand, whether it was Ambrose Evans Pritchard in the Telegraph talking about 25% of GDP all in, or even the debate, Francine, in the United Kingdom over the length of stimulus before austerity. It is a raging debate as Chair Yellen speaks today.
Yeah, it certainly is. I think if you look at the finance ministers of the G7, the chancellor here of the Exchequer, Rishi Sunak, one of the first ones, maybe talking about raising taxes as soon as Easter. We'll see what that means.
That'll
and then we
work.
have German ZEW January investor expectation rising a touch. Now let's get straight to the Bloomberg First Word News. In New York City is Karina Mitchell. Hi, Karina.
Francine, good morning to you. Treasury Secretary nominee Janet Yellen is expected to tell a Senate committee that low interest rates mean it's time to act big on a coronavirus stimulus package. The former Fed chair begins her confirmation hearings today. It will be the first time lawmakers can question someone about the Biden administration's $1.9 trillion relief plan. Meanwhile, White House officials don't expect President Trump to pardon himself, his family, or close aides. Still, the president is expected to announce a list of pardons today that may include one for a famous rapper. The performer known as Lil Wayne pleaded guilty to a federal gun charge. It's not known who else is likely to receive a pardon. And the UK will start to lift its coronavirus lockdowns in the first half of March. Health officials are ramping up a mass vaccination program this week. There's a mid-February target to vaccinate the 4 most vulnerable groups, and restrictions will start to be lifted 2 to 3 weeks after that. And the International Energy Agency has lowered forecasts for global oil demand. It's cut its first quarter estimate by 600,000 barrels a day. The IEA says that the global vaccine rollout is putting fundamentals on a stronger trajectory for the year. Still, forecasters say it will take more time for oil demand to recover because of new lockdowns. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg. Tom.
Karina, thanks so much. As we've seen over the last number of days, really a churn of the markets. We've got a lift in equities futures up 26. We're at the 31,000 level on the Dow, 30,080 886. And the VIX is telling it comes in 22.93. So I'm going to suggest middle of the range the equity market's been in recently. Yields don't give me much, 1.11%. On the 10-year, Brent crude 55.43. I'm struggling here, Francine. You know, I haven't looked at Bitcoin. Oh, Francine, I'll let you quote Bitcoin.
Bitcoin. There's always something going on with Bitcoin. And actually,
Yes.
I have to say, I really immensely enjoy Joe Weisenthal on Twitter with some scathing remarks about
Yes, I noticed that.
inflationary
Well said.
expectations for Bitcoiners. Now, global markets are climbing ahead of a speech by Treasury Secretary nominee Janet Yellen. She is expected, of course, to call for expansive government action to bolster the U.S. economy. So we'll see how that plays out with Treasuries. For the moment, they're climbing back to 1.1%. I'd also spent a bit of time, Tom, looking at the Russell 2000 index of small cap companies because it could come to a head in the first 100 days of Joe Biden. And then I'm looking at, look, across the world, there does seem to be a bit of a reflationary trade, and that's pushing through. And then I also wanted to show VIX not as elevated as it could be. Now, President Donald Trump, in his last full day in office, is not expected to issue protective pardons for himself or his family. He is ending his term in office with historically low approval ratings. According to a Gallup poll, his approval numbers have dropped to 34%. Well, joining us now is Wendy Schiller, Brown University Chair of Political Science. Wendy Schiller, thank you for joining us. First of all, is the Republican Party, given the latest Gallup poll about his popularity, still Trump's party or not?
Good morning, Francine. Good morning, Tom. Well, I think they are actually thinking about deciding that as we move along in the next couple of weeks. The pardons are really interesting. You can imagine a scenario where if impeachment had not happened and if the prospect of conviction wasn't the real prospect, we might see a very different set of pardons today, including a self-pardon by the president. But clearly the Republicans have sent the signal, if you go too far in the last couple of days of your presidency, this stems back from last Friday, then we will have to convict you. And I think some people in the Republican Party who are current incumbents running for re-election in the Senate in 2022 have to grapple with the idea of, do they want to shut him down completely, or do they want to still ride the wave of his energy, at least well into the...
You can see, guys, we closed position on euro, two positions. One position at 121.14 and another position 121.55. So here was our stop at 121.24. So after calculation, you already know your profit when you followed my trades. So after calculation, I'll show how much we made over these trades. Okay? Speak to you later.
The safe way to go. And every president does these commutations of sentences and pardons before they leave. So this is not unusual. It's any pardons, let's say, of any particular rioters that we've seen be arrested, Steve Bannon, you know, people who are really lightning rods. I think that's what people are holding their breath about, particularly in the Republican Party, because any of those kinds of pardons will put a lot more pressure on the Republicans in the Senate to convict Donald Trump. And I think that would bring about, you know, a pretty strong fissure in the Republican Party amongst the base who remain loyal to him, and the people who are trying to get that party organization back on its feet going into 2022.
Wendy, I'm so happy that you're on here the day before this inauguration. Jonathan Capehart in the Washington Post and with MSNBC has a fabulous essay today where he speaks to our great historian, Ron Chernow, about U.S. Grant. And of course, some of the parallels to that inauguration, the first inauguration of U.S. Grant, is very telling. Professor Schiller, link the overlay of the weekend's news on white supremacy into the future of any given party. Is your study of history that the Republicans can push that aside, or is that embedded into their process over the next few years?
Well, I mean, what I think a lot of Americans who want to see the country move forward, particularly on race relations, obviously criminal justice, policing, and also, frankly, every other piece of the fabric that knits us together, including the economy and wages and rising wages and falling wages, I think you have to think about what happened after Grant, right? I mean, he held the line, and then a decade later, you had Reconstruction completely fail, and you had white supremacy take over the South for essentially 100 years, about 95 years. So this is the big fear, is that, in fact, it runs deep and it runs strong, and the question is, will the institutions of the political parties be enough to withstand it, or will, you have to rely on government policy or government enforcement? We see that the Capitol is basically on, lockdown, which is very much similar to what the Southerners felt about occupation under the Reconstruction situation. So it's these visuals matter a great deal, Tom, exactly what you're suggesting. How Biden handles that, how Biden handles the rhetoric of the Democratic Party. The left it wants all sorts of things. Will it go for economic populism, get everybody back to work, get everybody doing better economically? Or will they want punishment? Will they want people to be just sort of shut down and run out of town, so to speak? If that's the mentality and that's the rhetoric of the Democratic Party, that becomes really problematic for overcoming, or at least really dealing with, what this strain of white supremacy that has run so deep in American politics.
Professor, Ulysses S. Grant had the hallway of the Willard Hotel, where the lobby of the Willard is where we get the phrase lobbyist, I believe. President Biden has Twitter and the speed of social media, visible and less visible. How do you frame the task that the president has at hand and government has at hand, given our new social communication?
Well, obviously, communication, the bully pulpit, so to speak, right? Teddy Roosevelt's use of the bully pulpit, Franklin Delano Roosevelt use of the radio, Donald Trump's use of Twitter, right? How does Biden, who's a very good communicator in the sense of sincerity and authenticity, I think that people trust him. I think he's going to have to win the trust of the people who voted for Donald Trump, of course, but that's more of a anti-government, anti-elections trust rather than a demonization of Joe Biden. So he starts with a sort of stronger advantage, I think, than a lot of other presidents, in the sense that there's a basic sort of sense, he's a good guy kind of thing. We'll see how that develops. That develops over time. So he's got to figure that out. He's not the best orator, so maybe Twitter turns out to be a really good medium for him, because it doesn't rely on the energy of an actual speech to the public rather than communicating through Twitter. But he's got to get coronavirus under control, and he's got to restore the faith in the government. The vaccine program has not rolled out the way that it should, again, instilling doubt amongst a lot of people on a different level than elections in government. How do the Democrats and Joe Biden restore that? That's a huge challenge, and that pervades everything else they're going to do. You can have stimulus, but if people do not believe in government, you're not going to get vaccines done the way that you need. You won't get coronavirus under control. You won't get an economic recovery. So these are really big challenges, but the fact that he stands in a position of almost neutrality in a lot of ways, I think he's going to maintain that with every single tweet that he sends out.
Thank you so much, Professor Wendy Schiller, there, Brown University Chair of Political Science. Now, joining us tomorrow for special coverage of the inauguration of Joe Biden, starting at 11 a.m. in New York, 4 p.m. in London. You can watch that right here on Bloomberg. Now, coming up, Sadia Zahidi, World Economic Forum Managing Director. That's coming up a little bit later. We talk about the top risks to 2021. This is Bloomberg Surveillance. Tom and Francine from London and New York. Now, we talked about politics. Of course, there's the inauguration, the last 24 hours of Donald Trump in the White House. And with that, we also have the hearing of Janet Yellen, nominee for Treasury Secretary. Now, joining us is Steen Jacobson. He is Saxo Bank Chief Investment Officer. Steen, if you look at the markets today, first of all, good morning. I jumped the gun a little bit there. But if you look at the markets, so they're clearly positioned for, some kind of reflationary trade, maybe looking forward to the explanation of Janet Yellen in terms of what the stimulus will actually do. What could change that trajectory?
Christmas. It's a little bit like Christmas, isn't it? The expectations are high, but the reality always tends to disappoint. And I think what people are saying right now, she's the most dovish chairman in history as a Federal Reserve. And as a Federal Reserve chairman, she was very much constantly reminding everybody that we needed a fiscal handover. Now she sits with the money printing machine of the fiscal treasury, and she's and the market expecting her to be going full out. Of course, there's a small senator, or actually a very tall senator from West Virginia, that can create some noise there. But overall, the market expecting more support. And it plays to this, which I think it's pretty sad, this narrative that the worse it gets for the economy, the slower the vaccine rollout is, the better it is for the market, because it extends the period in which there's going to be support, increases the size and the scope of the support, and Federal Reserve is going to support underneath all of that. So kind of ironic that the worse it gets, the better it gets for the market conditions.
Okay, Steen, Tom, I need to just, for the record, the Christmas lacroix never disappoints, but that's a whole other subject and a whole other date. Steen, when do you see inflation?
Now, I think it's already there. And I think one of the issues we have with inflation is, in particularly the US CPI, is that you have rent equivalence. And of course, rent equivalence is falling. We know for a fact that San Francisco rents is down 20-25%. We know New York rents is down. So there is too much bias on the actual rental value. But the overall point being that if you use the market to find price discovery, you're looking in the wrong place, because there are no price discovery in a market which is entirely controlled either by fiscal spending by government, or in the case of the marketplace itself, is controlled by the Federal Reserve. So what we do see, Francine, is the following. It is that the supply side of the economy is totally constrained. The last mile delivery is up by 50%. The freight weights around the world, so the shipping cost of what you do, is up by between 100 and 600%. So we can be online, we can be digital, but we need to produce this, we need to deliver to a port, we need to get outside a port into the coast of the US, and from the coast of the US, we need to deliver the last mile. All of that is up between 50 at a conservative rate and 200%. So the supply side, the transportation cost of the economy, the underinvestment into infrastructure is already giving us huge price signal. And the biggest one, which I think is the most interesting one, is the fact that commodity itself, the roll yield, i.e. what are you getting paid to be long commodities, is positive for the first time in many, many years.
Steen, I got about 8 ways to go here, but I'm going to go to a single sentence in your brilliant note that partitions the up and down of interest rates and the price of money. What is the price of money? What will be, within the process you just described, what will be the, excuse me, the tip point where all of a sudden we say we've gone too far fiscally?
That will be a price jump. So I don't think, the whole market is looking for, is it 125 in 10 years? Is it 2.5% in 30 years? I don't think that's it. I think it is the velocity, the speed of the move. So when all of a sudden the market realized that even just from a base effect, inflation will be hitting 3% over the course of the summer. On top of that base effect, you have these supply constraints, Tom. And then all of a sudden you have a discontinued pricing effect where prices jump from 2, 2.5 to 3. And anyone who studied the inflation in the 1970s know for a fact, yes, there was this oil crisis that initiated the impulse of inflation, but actually expectation of inflation continued onwards. So the total sort of input from oil was about 3% of inflation, but it ended at 12. I'm a little bit nervous. I'm not saying it's a big risk, but I'm a little bit nervous that we have this discontinued price jump because of the bottlenecks that we see. In other words, I'm really saying is that the physical world, Tom, is too small for the success of digital and online and the underinvestment into that infrastructure environment.
You've mentioned infrastructure twice. Let's go there. Do you partition fiscal support that is for income replacement, income substitution? Do you truly partition that from massive infrastructure spending, or is it all the same?
It is not the same because one is a replacement, as you said yourself, and using that word specifically, is a replacement of demand. The other one, everything being equal, infrastructure, ports, internet, access, airports, all of that has a productivity component to it. And I think the mismatch and the partition that needs to be is exactly that as long as deficits are used to drive up productivity, it is like for like very good to have bigger deficit. But if it's all about replacement and inequality and the likes, that has a social component that is political. But generally speaking, it does not have a productivity component.
Steen, we also have plans today for the European Union to try and give euro a bit more of an international role. What does that mean for dollar?
It means that the process that we've seen in terms of the reserve status of the US dollar is a little bit under attack is too big a word, but is, being dug at in a sense. And I think one of the other factors that we're seeing is digital currency for China, making the market deeper, more transparent, and put it on a technology platform. But overall, Europe clearly, like a lot of other countries that we've seen over the past 10 years, Russia, China to mention too, doesn't want to be dependent on the capital market, the US, as we go forward. And I think in particular, I think it is overall the size of the deficit and the velocity of those deficits. Don't forget, Yellen may be, Christmas coming for the market, but she's also starting from a point of having used the credit card all the way to $23 trillion worth of debt.
We see that overlay here, and of course, we'll see what we see from the Biden administration in the coming days. Steen Jacobsen, thank you so much with Saxo Bank, their CIO. Futures up 26, Dow futures up 161. Coming up, and this is perfect on a day where we greet Secretary Yellen, Alan Blinder, the former vice chairman, and his good friend, Janet Yellen. Stay with us this day before the inauguration. This is Bloomberg.
Continues to be, recovering well. And with the opening up that was decided at the last 5-year plan, that is a golden opportunity for many international banks.
So we'll look to double our footprint across IB and also wealth management and asset management in the 3 to 5 year time frame.
Growth outlook structurally is very strong. But it does need to consolidate and allow time to help the share price appreciation to move more in sync with the growth.
So China can avoid further decoupling if they stop these inappropriate actions.
But at the moment, we really want to see the dust settle first on international relationships, on China's role in the global economy.
I don't see a likelihood of a big change in the policy with the change of administrations.
market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. I'm Karina Mitchell with the Bloomberg Business Flash. In Europe, car sales fell the most on record last year. New vehicle registrations plunged 24%. Relatively resilient demand in the second half of 2020 only did so much to make up for the collapse during the initial coronavirus outbreak. In other news, the German sandal maker Birkenstock is in talks to be taken over by CVC Capital Partners. Bloomberg has learned a deal could value Birkenstock at more than $4.8 billion. The company launched the sandals loved by hippies and preppies alike in the 1960s, but its roots go back to 1774. And the social media network Parler has reappeared. The platform was briefly the new home for President Trump supporters who flocked to it after Twitter banned the president. But Parler became unavailable after Amazon determined it had violated its terms of service. Now it's found a new company to host it. According to tech news site Ars Technica, it's Russian-owned DDoS Guard. And that is the Bloomberg Business Flash. Francine.
Karina, thank you so much. Now, we want to look at the data. I also want to speak a bit more about Birkenstock. I'm fascinated. I mean, Tom on Instagram, or actually Twitter sometimes, has a wonderful collection of shoes. And Tom, I actually don't know whether you own a pair of Birkenstock or not. And that goes back to, you know, the Brooklyn, no comment, says Tom, through a spokesperson. But, you know, Birkenstock with socks, it's amazing, actually, that they're selling and they could grow into new categories.
Birkenstocks.
Tom's focused on the bow tie.
Yeah, Birkenstocks.
Do they make bow ties?
Do I look like a Birkenstock kind of person?
Well, let's do a data check. I mean, maybe, Tom. You're full of surprises. That's what I've learned in the last 4 years.
I'm a sensitive guy, yeah.
Yeah.
The 10-year, 1.11%.
Looking at data.
Where are we? Futures up 24, the VIX 22.95. I do note some dollar weakness all of a sudden. A little bit down, we go on the dollar, but all really pretty much mid-range. You know, Francine, one thing we know for certain is Matthew, who runs the show here, he has 4 pair of Birkenstocks.
Multiple pairs.
He's got 4 pair. Depends if he's playing Mumford & Sons or whoever. This is Bloomberg. Good morning.
Typical clothes wash, up to 700,000 fibres could come off our clothes.
Permet de collecter environ 3 à 5 tonnes de déchets de PET chaque mois. Donc, une partie est utilisée pour faire des bateaux, une autre partie pour faire d'autres poubelles, et d'autres parties, bouteilles, sont plutôt stockées que nous fournissons à certains partenaires.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Bloomberg surveillance from New York, from London. Francine Lacroix and Tom Keene. Good Tuesday to you. 4-day work week in America. Others working like Francine yesterday. Thank you, Francine, for keeping the ship going yesterday. Right now, Steve Jacobson with us with Saxo Bank. We've been talking about demand out there. We've been talking about supply out there, which goes to the makeup of our global recovery. Are we still a consumer-led global recovery, Steen?
Absolutely, and the governments plays a huge role in this. During the pandemic, we saw something economically we'd never seen before. 13 million Americans lost their job, and in the same time period, they had an increase in disposable income. That disposable income has flowed over into economic activity in China, and then again, we come back to the supply constraints, because now you can't actually get the containers into New York and other places. So yes, it's very much driven by government support of the consumer sentiment.
Steen, where do you see the best value for 2021? I know we talk about, equities running hot. We talk about bubbles. Is there any part of the market that you think is unloved and warrants a bit more attention?
In relative value terms, of course, commodities and commodity-linked stocks are something we have a big focus on. And in terms of the sort of technology space, we are far more leaning towards the logistic companies than to the actual Amazon and platforms and the likes, exactly because of these supply constraints. We do like to have the ability to belong to stocks that deliver the goods at the end of the day. But overall, I think I'm a bit lukewarm on the market right now. I know I used in the last segment the Christmas analogy. I feel very much like a 12-year-old expecting a great year. I see all of the sell sides are now looking at 10 to 15% rises expected for 21. I just don't see it. I think the rate sensitivity and the bottlenecks of the economy is going to give us some additional issues. And don't forget, if we do have a rollout of the vaccine that rolls faster than expected, more quickly, then to some extent we will have to retire some of the support that we see on the demand side. And I don't think the economy can take it right now. I think we have a very leveraged, very insecure, and very little transparency in terms of what goes on.
Tom wants me to ask about Bitcoin, Steen, because we try and talk about it, day in, day out to try and figure out exactly what's behind it. Do you have a view on Bitcoin?
We have, and we have it in the portfolio. Our overall portfolio is 7%. And I say very simply why we have it. Two things drives it. It's an optionality. In an environment where I have minus 100 basis point real rates expected for fixed income and fixed income generating products, I am willing to put 7% of my total portfolio into something that at worst is worth 0, at best is worth 10, 15, 20%, and in a very best case 100%. So I use it as an optionality. And the second part goes to the whole idea about the fiat money system. I'm not a doom and gloom guy, but everything being equal, I'd rather be long and stored in technology than in fiat money that is under severe attack with an incoming government in the US who wants to increase the amount of fiscal support for the economy, wants to push money into small pockets of the economy that can't take it, like green transformation.
Thank you so much. Steen Jacobson there, Saxo Bank Chief Investment Officer, joining us this morning. Now let's get straight to the Bloomberg First Word News in New York City. Here's Karina Mitchell. Hi, Karina.
Francine, Janet Yellen will have a different task than she's used to when she goes before a Senate committee today for a confirmation hearing. Joe Biden's pick for Treasury Secretary will defend the president-elect's $1.9 trillion stimulus package. Yellen is expected to tell them that low borrowing costs mean it's time to act big. She's a former Fed chair who spent years defending central bank thinking and actions. Meanwhile, the Biden administration has rejected a move by President Trump to rescind travel bans on non-American citizens. arriving from the EU, UK, and Brazil. The bans are aimed at preventing the spread of coronavirus. President Trump said the bans could be eased safely, but Biden officials say they plan to strengthen public health measures around international travel. And President Trump's approval rating has dropped to just 34% in a new Gallup poll. That is a low point of a presidency that already had the weakest average approval rating of any of his predecessors since the survey began in the 1940s. The president's approval rating has fallen 12 percentage points since before the election. And in Italy, Prime Minister Giuseppe Conte faces a crucial test today. There is a confidence vote in the Senate one day after he won a similar vote in the lower house of parliament. A narrow win in the Senate could allow Conte to stay in office, even if his support falls short of an outright majority. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg. Tom.
Karina, thanks so much. Coming up, any number of themes here, but one of the major ones is how we synthesize risks to a presumed vaccinated recovery. Sadia Zahidi joins us with the World Economic Forum. Futures up 25 this day before the inauguration. This is Bloomberg.
Uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
This is Bloomberg Surveillance. I'm Francine Lacqua here in London, Tom Keene in New York. Now, in 2020, the world experienced firsthand the catastrophic effects of a pandemic, a risk that the World Economic Forum says was long ignored until now. In today's annual risk report, the World Economic Forum lays out the other dangers ahead. Well, joining us now is Sadia Zahidi, World Economic Forum Managing Director and, of course, co-author of this report. Sadia, thank you, as always, for joining us. When you look at the risks, there are about 4 to 5 top risks, which is climate change, which is not having access to the internet and things like that, which we've talked about in the past. But what is the chance of a black swan event like the pandemic? Sure, people talked about it, but it was almost unpredictable that it would come with such force and so quickly.
So, Francine, that's what's interesting about this report, and I think that's why we're saying this really has to be a wake-up call. The pandemic, or rather the risk of infectious diseases, was something that had been called out for the last 14 years in the global risks reports, always of the varying degree of, what the impact may be, what the likelihood may be, but there had been this focus that this is there, it's this possibility of a low likelihood but very high impact event, and we needed to watch out for it. And I think what we're trying to do with this year's report is actually really call out what are those other areas. And we tried to do that with different timeframes. So if you look at the next 2 years, there are some very clear and present dangers. One of which is, of course, that this pandemic hasn't yet gone away. The second is the loss of jobs that have occurred, frankly, around the world. This is not really a problem that's limited to one economy or another, regardless of how economies have dealt with it. And then a third element is digital inequality. Half of the world still doesn't have access to the internet at a time where most economies are only really able to function digitally. Then you look 3 to 5 years out, and that's where you've got some of the knock-on effects. That's where there's the possibility of debt crisis, of course, with the excessive amount of spending that governments are doing now. When might that bill come in? There's the possibility of commodity shocks. There's the possibility of technology governance-related crisis. And then 5 to 10 years out, there are really the dangers that we know are existential threats to the planet. And that's, of course, related to climate change, but also concerns about state collapse, collapse of the multilateral system, and weapons of mass destruction. So that's sort of the flow or the sequencing of how we're seeing these risks playing out.
Sanya, when you look at the barriers to digital inclusivity that you also just talked about, what does that lead to if we don't address this in the next 12 to 18 months?
We talk about a K-shaped recovery within certain economies, for example, within the United States. But what we're actually looking at is a K-shaped recovery globally. There are parts of the world that have digital access and inclusivity, and that is where some parts of the workforce, not all, are able to continue, are able to adapt. But then there's this other part of the world where we don't even have basic internet access, basic electricity access, basic water access, and that is where recovery and a return to growth will look very different. And in fact, we're starting to see that there's the possibility for the first time in a very long time of more people falling back into poverty than before. And so globally, there is this bifurcation in terms of growth and development.
Sadia, I go back to 2012, and I will not mince words, folks. It was a brutal Davos. Occupy Wall Street was in full force. The final day of Davos was really, really not good. There's a protest out there, and you brilliantly identify it with your clear and present danger, and the inequalities are there. What are the urgencies right now so we don't have a global protest over these new inequalities?
Well, I think you're starting to see that already. What COVID has done is accelerate some of those trends. The extreme disillusionment of youth, particularly if you look at some of the older millennials, when they first started out in the workforce, they were facing the global financial crisis. And now, 10 or 12 years later, they're basically facing this crisis. So there is this entire generation that is scarred by two crises, and there is this risk of a breakdown of societal cohesion. Now, where do we go from here? I think that's what this report is calling out. A focus on inequality will need to be critical. Governments cannot simply talk about a return to growth. They cannot simply talk about a return to even sustainable growth. If that growth does not give people equal opportunity, whether it's in advanced economies or in emerging markets, there will be a rise of social fractures, a rise of social movements. There will be more discontent across economies and societies.
What can corporate leaders do? I've had this debate well over 10 years in the sidewalks of Davos, which is reticent CEOs that don't want to be part of the debate. They're hardwired to be like that. And yet that Richard Edelman, with his trust study, say the CEOs have to become more active. What's the WEF prescription for beleaguered, shy CEOs?
What's interesting is the latest results of that survey show that actually business leaders and corporations are generating more trust from society than at present, politicians or even civil society organizations. And I think that is in part because of this shift towards stakeholder capitalism. You talk about, the last 10 years, but over this last year, in the midst of this pandemic, in the midst of this emergency, is exactly the same moment where businesses are having to take ESG metrics much more seriously. Even in the midst of layoffs, they're having to think very hard about how they continue to contribute to their communities and societies and what their overall contribution is in managing this crisis. So I think you are seeing this big shift happening, and there is no other way out. Governments have already given massive amount of stimulus, $12 trillion globally, and there is more to come. But at some point, this cannot simply be about stopgap measures and managing the emergency, but it will have to be about investing in a new kind of economy. And that's where the private sector becomes critical, and that's where governments incentivizing the private sector becomes critical.
Sadia, in some of the long-term risks, you also talk about, a backlash against science. Is this the year of reckoning where we see whether people still believe in science? And are there any steps that, businessmen, businesswomen, and governments can do to try and ensure that we still stay on the path of, trusting science?
And if you look at one major example, how quickly the private sector, the public sector has been able to collaborate and start working towards a vaccine. This is the kind of process that may have taken years in the past. And so I think there is, for some part of the global population, a restoration of faith in science. But that also means we have to take much more seriously climate-related science. We have to take much more seriously the social sciences that are telling us that the numbers when it comes to unemployment or youth disillusionment or youth disenfranchisement are equally important to look to. So looking at data, looking at evidence, and making decisions on the basis of that becomes critical. And that's very much what we hope we're driving everyone towards at the Davos Agenda Week next week.
Thank you so much, Sadia Zahidi there, the World Economic Forum Managing Director. And of course, next week starts the Davos conversations all virtually. Now, we understand from the London Metal Exchange that they will propose closing the trading ring for good. Tom, it brings back memories. I remember when I was a junior reporter here in London going to, of course, the Open Outcry ring, and the fact that they're now trying to close it goes to be, as part of the exercise that has been slowly coming, certainly to the London Metal Exchange over the last 15 years to modernize.
This is a huge deal. This goes back to 1571, and then the advent of the modern system, Francine, in I believe 1877. And Francine, you're right. This is the last bastion of what used to be. I've never seen this, but once, Francine, I was with Rachel, and Rachel and I ended up at the Dorchester Hotel bar, which is where everybody in the ring goes when they're done with the ring business. They go to the bar at the Dorchester
From one ring to the other.
Hotel, to the other ring. They do a chalk circle in the bar of the Dorchester Hotel, stand around it and order Rob Roy's, I think.
Tom, just to put into context, and I just verified the figures, but the LME rings underpins roughly $50 billion of metal trades every day. It's been operational since the 1800s, I believe, surviving 2 world wars in the process. And it was really regarded one of the historic moments, the ringing of the bell. So I'm sure a lot of people will see it as a sign of the times, modernization, but also with a little bit of melancholy as well.
Yeah, well, there it is. It's a big announcement for everybody in Global Wall Street. We welcome all of you this morning. This is an important interview. We're really looking forward to it. He is our expert on executive orders and on executive and legislative dynamics in the United States of America. Andrew Rudlevich is with Bowdoin with some important books thinking about what is the purpose of a president in a modern presidency. We're thrilled to bring him to you. We do that next. This is Bloomberg. Good morning.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Bloomberg Surveillance. Good morning, everyone. Francine Lacroix in London. I'm Tom Keene in New York. This is what we like to do and what we think we do best. Go out there and find people who are legit authorities on the moment at hand. And, of course, the moment in America is the inauguration of Joseph Biden. Andrew Rudalevich owns The High Ground, is a Brackett Reed professor at Bowdoin. His books are exceptionally important and consistent on the changing presidency and how the presidency affects the legislative branch. We're thrilled that the professor could join us this morning. Professor, you grew up in the crucible of hand-to-hand combat in politics. Watertown, Massachusetts. Is Washington becoming like the politics of Watertown, Massachusetts?
Well, the one thing about Watertown, and if you know Massachusetts in the 1980s and 90s, you know it was effectively a one-party state, except perhaps at the gubernatorial level. Joe Biden is not going to have that luxury. So, polarization in Watertown was of a very different character than in D.C. these days.
I've read a few of the executive orders of President Trump. Will President Biden's executive orders, will they have the same tone, the same energy, the same legal structure?
Yeah, you raised an interesting point in that President Trump's executive orders were very flowery in their rhetoric compared to the past sort of universe of executive orders, which are really legal documents demanding that the executive branch act in a certain way. President Trump used them sort of as a cross between a press release and a directive. They were, full of, these policy statements about the problem that the order was designed to solve, sometimes at great length. As recently as yesterday, right, the president issued an executive order about American heroes and went on for some time about the problems in American civic life and how these could be solved by erecting a new garden of statues. And again, that kind of hortatory, flowery language, I really don't expect to see repeated in the Biden administration. I think we'll see a return to the old, boring executive orders that really are bureaucratic directives to officials within the executive branch itself, as opposed to meant for the consumption of the interested public.
Professor, given the approval rating currently of Donald Trump, is he still the Republican Party? Are they interconnected, or are we going to see, a clear divide?
That's a very interesting question, and it's going to be one of those cases where the proof is in the pudding. The president clearly, the outgoing president, would very much like to be the dominant force in the Republican Party moving forward. He wants to be able to, with the snap of a finger, to control primary elections and the tone of Republicans on Capitol Hill and well beyond. Obviously, the events of the last couple of weeks have weakened that, have made it clear to Republicans, especially in elected office, the dangers that might pose. On the other hand, the president's command of the grassroots party still seems strong. So there's going to be a struggle, right? And that will start with the impeachment trial as soon as that begins in the Senate. And we'll have some indication then of just how sweeping the president's control of the party moving forward will be.
How many legal troubles is Donald Trump in tomorrow noontime?
Well, there seem to be problems at the state level, for example, in New York, where there have been examinations of his company's finances, his own taxes. the setup of his father's estate as that came to the family. You will have issues that flow out of the riot that his rhetoric helped to incite a week or so ago. Well, I guess we're up to 2 weeks ago now. There are issues still flowing out of the obstruction of justice questions that were raised as far ago as the Mueller report. So there are definitely some issues he's facing. And, as we know more, as people feel freer to talk about events within the White House, we may have issues. Of course, some of the president's closest allies and confidants also may face their own legal challenges. We've had reports this week about the possibility that pardons were sort of up for sale among the president's legal team. Again, we won't have an idea quite yet about the scope of what the president does with the last 24 hours in office, but there are some problems even there, potentially.
Professor, we've run out of time. This has been absolutely wonderful. We'd like to continue this discussion. I've got about 10 more questions, including Brunswick, Maine, and how the hockey team will do this year in the crisis. Andrew Rudalevich is with us with Bowdoin College, the Beckett Reed Professor of Government. Francine, there's just so many questions to ask the professor and frankly many others as we talked to Professor Schiller of Brown earlier about this changing of the guard in Washington. I'll tell you, Francine, I've been to a couple of these. Tomorrow's going to be absolutely original.
Yeah, also because actually it starts today, right? Donald Trump is expected to vacate the White House today. He won't show up at the inauguration. Tom, one question, does Vice President Pence actually take on the duties at the inauguration that Donald Trump would have otherwise fulfilled?
A really smart question, and the answer is we need to go back to Andrew Johnson after Lincoln and into U.S. Grant. So the precedent for this is in the midst of the past. Francine, I don't think in so many of those issues people really know, other than Pence will stand up and be there. Coming up, he'll stand up for growth. David Pearl, Epic Investments. This is Bloomberg. Good morning.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings.
Environment. The politics of global warming.
We can and we will deal with climate change.
The fight against climate change. Bloomberg Green has you covered.
this morning, it is time to, quote, act big, as Chair Yellen will become Secretary Yellen, her president-elect. He says needed is immediate action. Chairman Powell says we were in a good place last February. Andrew Johnson, well, he snubbed a U.S. grant, so too Trump. In a closed-to-the-public inauguration, look for Biden to channel his inner Kennedy. And China grows. Markets adapt. They adjust to present slowdown. Maybe they adjust to a post-COVID boom. Good morning, everyone. On a Tuesday, this is Bloomberg Surveillance. I'm Tom Keene in New York. Francine Lacroix on the 5-day work week watch in London. Francine, the inauguration here really is front and center, of course, with our special coverage beginning at 11 o'clock tomorrow. And it will be, Francine, an original moment.
Yeah, it'll be completely different because usually I think you have at least 200,000 people that get tickets, I believe, through their congressman or congresswoman. This won't be the case. I've been looking at pictures, Tom, and really reading all of the U.S. papers. They will put flags instead of the people that usually attend. Yeah. Of course, extra security checks. I think 25,000 extra National Guards have been deployed, and we look at the moment of tomorrow, of course. Today we look at the last day in office for Donald Trump, who he will call, if it's a head of state or not, and then we look at, Janet Yellen in front of the Senate committee.
Markets with a lift today. We'll get to the data here in a moment. Futures up 27. There is other news, but truly a focus on the inauguration. Kevin Cirilli to join us in moments. With our first word news in New York City, here's Karina Mitchell.
Good morning, Tom. Treasury Secretary nominee Janet Yellen is expected to tell a Senate committee today that low interest rates mean it is time to act big on a coronavirus stimulus package. The former Fed chair begins her confirmations later this morning. It will be the first time lawmakers can question someone about the Biden administration's $1.9 trillion relief plan. Meanwhile, White House officials don't expect President Trump to pardon himself, his family, or close aides. Still, the president is expected to announce a list of pardons today that could include one for a famous rapper. The performer known as Lil Wayne pleaded guilty to a federal gun charge. It's not known who else is likely to receive a pardon. And the UK will start to lift its coronavirus lockdowns in the first half of March. Health officials are ramping up a mass vaccination program this week. There's a mid-February target to vaccinate the 4 most vulnerable groups, and restrictions will start to be lifted 2 to 3 weeks after that. And the International Energy Agency has lowered forecasts for global oil demand. It's cut its first quarter estimate by 600,000 barrels a day. The IEA says the global vaccine rollout is putting fundamentals on a stronger trajectory for the year. Still, forecasters say it will take more time for oil demand to recover because of new lockdowns. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg Tom.
Karina, glad you put oil in there as well. $55 on Brent crude, $55.43. West Texas, $52.60. Futures advance up 28. Pretty much good correlation here with the 10-year yield rounded up 1.12%. Francine?
Tom, I'm looking at stocks, I'm looking at treasury yields. They're all rising before the speech by Janet Yellen. So it's very clear that there's a broad advance with equities, futures, but also the Russell 2000 index, a small cap companies registering pretty strong gains. The 10-year treasury yield climbing back to 1.1%. I wanted to mention oil prices. Emerging markets also up on oil prices. We had the IEA saying some of the lockdowns will hurt growth and therefore oil demand, Tom.
Very good. Our chief inauguration correspondent, Kevin Cirilli, joins us right now. Kevin, you measure the gates, the guards, the military that you had to get through to get to our shop today, 2 blocks from Gucci, which is, of course, where I center everything in Washington. It's great. It's a lot of jokes, but this is not funny. How original will this be? What is your observation on what we will observe tomorrow?
It's going to be a stoic, somber inauguration in which I'm told President-elect Joe Biden will try to deliver a message of optimism. It comes in the past week, Tom, as President-elect Biden has really unveiled an economic plan and also new policies as it relates to the vaccination rollout. It's going to be striking to see the former presidents as well as the current Vice President Mike Pence in attendance, and to have one glaring, notable absent, and that, of course, is President Trump.
Well, Francine just asked the money question of Rudolevich of Bowdoin College. Let me ask it of you and steal it from Francine. Does Vice President Pence substitute in the duties of the President of the United States?
Well, I mean, he'll be there tomorrow, and President Trump won't be. And beyond that, we should also note that we're learning this morning that President Trump will deliver brief remarks between 7 a.m. Eastern New York time and 8 a.m. New York time at Joint Base Andrews. And so that will likely be the last time that we hear from President Trump as the President of the United States.
Kevin, what are we expecting in terms of pardons?
We're anticipating pardons to come out sometime today, anywhere from 50 to 100 pardons. But it's you know, there's going to be a lot of questions about who specifically, why specifically. You know, we all know that the president had pardoned Paul Manafort, for example, his former presidential campaign co-chairman. But we don't know. But there's been a lot of open ruminating about whether or not he'll pardon himself, members of his family. But we'll find out today.
Kevin, what exactly can we expect, you know, post-inauguration? So we'll have a speech by Joe Biden. How somber will that be? And then when does he actually get to real work? What's his #1 priority?
Defeating COVID and the vaccination rollout. And, you know, coupled with Treasury Secretary nominee Janet Yellen's testimony today, it will likely immediately turn to trying to get votes on Capitol Hill to pass an economic stimulus. The president-elect has laid out clear goals in terms of 100 days to get 100 million vaccines. Wearing the mask comes at a time in which lockdowns are increasing, COVID rates are beginning to surge again, and so COVID-19 is the top of his priority list.
Kevin, will the president-elect sleep at the White House tomorrow night? I know they've got to do a COVID clean, which they would do for any building or that, but are we going to see the symbolism of Mr. and Mrs. Biden on the porch of the White House tomorrow, waving much as the Prime Minister does at 10 Downing Street?
No, that's a great question. I don't know the answer to that, but I can tell you that they'll be staying at the Blair House tonight, which of course is right across the street from the White House, and that is an American tradition.
Kevin, when you look at, you know, how the festivities usually change from inauguration, how much security concern are there? So we have extra troops on the ground, National Guard on the ground. Are they being vetted like we've never seen in an inauguration before?
This is unprecedented in terms of the security deployment that is here in the nation's capital. There are more National Guard troops in the nation's capital than there are in Afghanistan and Iraq. There is a significant military presence, police presence, and I would say the best similarity to that would be to those, you know, at the G7 or the G20 security presence, but they're all about the city. It's incredibly notable.
Kevin, thank you so much. Greatly appreciate it. And of course, his coverage through tomorrow as well. Our Chief Washington correspondent, Kevin Cirilli. Our coverage beginning at 11 a.m. tomorrow. Of course, we'll have much of this in the early morning tomorrow as well across all of Bloomberg. As well is the inauguration of Joseph Biden. Coming up, Makan Delarim will join us, the U.S. Assistant Attorney General in Antitrust. That at 1 p.m. This is Bloomberg. Good morning.
explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Bloomberg Surveillance. Good morning, everyone. Francine Lacroix in London. I'm Tom Keene in New York. Futures advance up 29, doing better. The VIX in not 2 points, 1.73 points. We'll take it 22.61. On the markets and on your selected walls of worry, David Pearl of Epic Investment Partners. David Pearl on the measurement of cash flow and an optimism to the future. David, let me cut to the chase. Is the market overpriced?
The market is a little bit overpriced, but again, it's a huge spread between very expensive stocks, which happen to be growth stocks, and more economically sensitive stocks, value stocks, which have lagged over the last number of years. As an example, financials are still at a huge discount to the market, as are many consumer discretionary stocks due to COVID. So there really are opportunities for companies who are earning a lot of money to have a recovery with the economy and stimulus and be driven by earnings growth. The market for the last few months has been driven by valuation more than earnings. So really the market rise is worrisome because it's about valuation more than free cash flow and earnings growth.
Is free cash flow linked to revenue growth? I've been noting the partition of revenue growers versus less revenue growers. How do they link into Epic's wheelhouse of free cash flow analysis?
Well, yeah, the most egregious companies in terms of valuation, but of course a great performance, have been the companies that earn no money. The technology stocks that have no earnings whatsoever were up 400% last year versus the market. And the only way they'd be up less is if you denominated it in Bitcoin. That's a Bloomberg article, by the way. So there's been huge speculation that companies that can grow revenues quickly will at some point in the future have free cash flow or earnings. But, when rates go up, which is what is happening, at least slowly, the future value of that profit in the future goes down. So those companies really look most expensive right now, and actually are, many of them will never earn any money historically.
David, when are you, and good morning from London, when are you actually expecting rates to properly rise? When are you expecting almost a return to normal in terms of, monetary policy?
Well, it's tied to recovering from COVID, which recovers the economy. And of course, it depends on the amount of stimulus spending and debt that the country takes on. So the stock market, then particularly the bond market, is already reacting to this, as the 10-year has definitely moved up, 30-year a little less so. But it has affected the market because banks and financials have rallied over the last 2 or 3 months in reaction to that. It's clearly beneficial to them. But it is a reaction of investors that inflation is becoming inevitable if we continue to deficit spend. And that's exactly what Janet Yellen's going to be talking about right now. The deficit has continued to expand, and we're proposing even more deficit spending.
David, what would be your question to Janet Yellen today?
Well, what is a useful stimulus? It's clear that people out of work need help. But do we really have to send checks to every able-bodied person, even if they have a job? And even more than that, is this the time to increase the minimum wage, to increase, parental leave benefits and other social safety net items when employers are having a hard time keeping people employed? So, really, when you look at the $1.9 trillion stimulus, probably less than $1 trillion is directly aimed at those who are directly hurt by COVID. The rest of these are nice to haves if you are particularly, a Democrat or a more progressive. So that's I think where you're going to hear this throughout Congress. I think there is consensus to help those who have lost their jobs or are in other need right now.
David, do you just assume that we return ex-COVID back to the fully employed nature of February?
Oh, it's definitely going to be a slow recovery, but certain industries are snapping back, you know, relatively quickly. So, you know, people want to go out, consumers want to spend at restaurants, they want to travel. It'll take a while. Travel will probably be the last area to come back. But at the same time, when you're looking as a investor, those stocks are beginning to discount a recovery, even if it's 2 to 3 years from now, given that they were down 50 or 70% in March. So there are really good opportunities to buy these economically sensitive industries, even now, knowing that it's going to take more than 6 months at the minimum to get back to close to normal. And then it's a question, just like after the Great Recession and the financial crisis, whether we have a very tepid recovery because, you know, we increase regulation, taxes go up, you know, more policies that slow economic growth of companies or not, and we'll see.
We got Bank of America coming out here in a bit. A little confusing here right now, David Pearl. I assume you're not seeing this because you're so handsome looking at the glass. But Bank of America announcing an authorized share buyback. They announced stock dividends, etc. Is part of the bank story use of that free cash flow to deploy to shareholders, particularly J.P. Morgan?
Oh, absolutely. Bank of America and J.P. Morgan in particular are so well capitalized. This is completely unlike what happened at the financial crisis. Right now, they've over-reserved